in the past, especially when you're looking at the institutional ecosystem, the reason why some of the big global funds were traditionally hesitant was because of the regulatory uncertainty and the lack of support in this overall, in terms of players, in terms of, travel rule screening, market integrity issues, and the overall, fear of a backfire effect from the regulators. But I think what we saw actually in this space was that some of the family offices with long-term horizons actually went in first because their goal is long-term preservation and they were looking at the strong upside. And later on, you did see a lot of asset managers start to look into it as a credible option, as a new asset class where there could be a lot of opportunity because of market alpha and volatility, all those factors which CJ Fong alluded to. And I think it's quite important to understand that these different layers does mean that the level of regulatory certainty in operating in these jurisdictions is quite important. So I sit on the board of Access, the Blockchain Association in Singapore, and we have had various industry discussions with MES, industry input, where we have to try to push the bar in providing clear and coherent data as well as input on a lot of these matters, because I think the key also is to be working with regional associations like the GDF, the Global Digital Finance, the Hong Kong FinTech Association, on really correlating key data and information to the regulators so that they're able to make clear and balanced regulatory input and consultations to the industry as well, and understand where the industry is coming on a lot of the response and developments. And I think what is important to note also is that we see that gradually, indeed, it's a global frame of mind. It is indeed very rare that a lot of players operating in this space are focusing on one or two jurisdictions only. It's more the case that we sometimes get tasked to do, for example, 100 over jurisdictions, examining how do you characterize specific products that look a lot more like traditional products nowadays, when you're coming to crypto options, perpetual futures and all that. What are the licensing and regulatory requirements on platforms and offerings, as well as, whether there are any issues with the regulators in terms of enforcement, training materials, investor scope and suitability, what are the considerations in those jurisdictions. So I think in dealing with these issues, it is important to understand that you have what is published formally by the regulators, but you also have a lens of informal directions, developments behind the scenes, and a lot of industry correlating in terms of input, which goes through a lot of these associations, a lot of the voluntary initiatives by the exchanges, which Alex is very familiar with on the travel rule. And all this happens behind the scenes, and it's important to get that clarity whereby not every jurisdiction needs to have the same response, but it is important that the regulators understand why different standards are being taken and the basis of which different standards are compared. In some way, I think there's a lot of similarities to ESG, for instance. Yeah.